Welcome to Trading Lounge and the S&P 500. I like to start from the weekly and work through to the intraday because I really want to sort of explain the perspective and the concerns that I sort of have. In a nutshell, we're looking for a move off the 2000 here from wave 4 up into wave 5 here at the 2500 area here, and we're looking for that to occur within 5 waves. So we're certainly on track, and everything is right. And our target levels would be the first target is the 2,200, and the second target is the 2,300. So even though we're long here, we should. I don't know. Most people trade very short term, but obviously the money's in the trend. So looking at these next levels here as targets, target 1 and target 2, should be considered even for shorter term traders, leaving a little bit more money on the table. Now, the things that I want to talk about is that this is basically the distance of wave 1 here in this little stick, and wave 3 here, this wave 3 here, it can't be any shorter than wave 1. Normally it's wave 1 plus 61.8%, so normally it's much longer. So we're going to go for that, and I normally find too that with the levels, it's normally the third wave that hits the level, because we use the Fibonacci as a price ratio here with the trading levels. It all sort of fits in quite nicely, a bit like over here really. Wave 3 hits the level, wave 4 comes back, and then wave 5 is the top of the level. So when we look at the classic trading levels pattern, we have the arrival, the reaction, the first high above the level, and then some type of correction, then support, then we take the high out here to go long. But in this case, we've been long, much earlier here, of course. But so just to get an idea of sort of perspective here, so that's that. And on the daily chart here, I'm a bit more, I was more concerned about it yesterday than I am today, but looking on the intraday chart, I feel a little bit more comfortable about what I've been talking about, this market stretching much higher here. So I feel like we're sort of on track, but I still want to see a lot more out of this third wave coming up here. The orange one is the minor degree structure here. So as I mentioned, this is the little guide stick here, so we're looking for at least to get to here. That's our second target. So our first target is 2,100, then 2,300. So these are sorts of areas that we need to sort of discuss to work out, to take profit or take part profit and then buy back in at lower prices, in the pullback. It's quite difficult sometimes, you say, well, why don't we just, get out here, Pete, and get back in over here and these sorts of things. But it's not always that easy, and it's better just to leave some skin in the game. And that way, as the bull market sort of unfolds, at least you're in it. There's nothing worse than, and this happens to new traders a lot, that there's a whole bull market and you've been in and out, and you've lost money all the way up. So it takes courage, and this is it gets back to having a solid risk management plan and a good trailing sort of stop loss as well. Most people tend to overtrade, and they can't take the heat, which is a bit of a shame because less is more in that instance. So anyway, progressing nicely. I was concerned about this little third wave coming in here, which we'll look at now on the 4-hour chart, but it's starting to sort of stretch out a little bit better than it was yesterday, and I've also altered the count. I also miss another little wave in there. It's just a little tiny one on the 5-minute chart, but it makes a difference and starts to put this third wave into perspective here, which is really what I've been looking at, because we really want this. We want this third wave here longer than this first wave here too. So that's what we're working on at the moment. So this is target 1 here, and we need to have some consideration of what we're going to do when we get here. Do we take all the money off the table? Do we take part off the table? And so on and so on. I'm a strong believer of having different using the price along the side here as more of a mathematical way to add and subtract contracts within the market and try and edge yourself into better sort of positions as we go through corrections. Now, we have to be a little bit mindful. From this wave 2 here, if we move up to wave 3 at 2200 here, the 38.2 retracement's back here. So it's quite a way to hold through, really. Now, that's the textbook pullback. Now, that may not occur, and the reason that it may not occur is that we're still in the center of the trend. We're in wave 2 here to wave 3 up here. So we're really still in the middle of the trend. If we were further up in the 5th wave of minor degree up here further, and we're going through series of wave 4s, because with every trend there's a beginning, there's a middle and an end. And in the middle, the retracements can be less, and at the top of the trend, they can be where the market starts to churn and profit taking from the commercials becomes larger, then those retracements become more true to form in terms of their levels here. I mean, this wave 2 here, for instance, that didn't pull back 61.8%. So, you know, this is where we are with it. So we need to acknowledge where it can pull back, but at the same time, have the understanding of where we are in the larger fractals of the wave structure as it's moving along here. So I do think that we need to take some profit here and buy back at better prices as such, but it's something that you need to think about personally as well if you're traveling the same course as I am here. So right, so let's move in here a little bit further now and just picking this up here. So wave 1 here, wave 2, and we're looking at wave 3. So this is our target 1 area here, okay, and this is the wave 4 pullback here. Now, the first wave 4 pullback that we need to work out here is that from wave 2 to wave 3 here, we've got 5 waves, 1 and 2, and this wave here we could just about put in here now, and then there'll be a wave 4 here. So we're expecting a corrective pattern across the midpoint here. So from 100 to 200, we divide this up into the Fibonacci relationship as well. So we've got 10, 20, and 30 make group 1, then the midpoint 50, and then group 2, which is 65, 72, and 80 here. These are all the levels that there will be corrective patterns at. So we're at the midpoint at the moment, so let's just drill into this section here, but be mindful from wave 2, we're looking for wave 3 up to here in 5 waves. So we're going to cut through into the 15-minute chart here, and we can pick it up from this wave 2 here, the blue wave 2 here, and we're looking at green wave 1, green wave 2, all the way up here for a nice strong third wave for wave 3 and wave 4 here. Okay, so this is the one that we're facing at the moment. This is what we need to talk about today. And yeah, so just opening this chart up a little bit here. So from this wave 2 here, we've got wave 1 here, or the next degree smaller, and wave 2 here, and all these tiny little structures have been accounted for here now. And I've made 2 mistakes over the last 2 days. That's a nice one, Pete. But they're just been little tiny ones. But I feel like we're not far behind the 8 ball anyway. So, but this is where we are at the moment, and this is what we need to discuss now. So if we leave wave 3 here and wave 4 here, then we're looking here for as wave 1 and 2 here, and then if you can follow me here, we've got 1, 2, 3 sideways for 4 and up for 5. So we've got the third wave here. So we've got 1 and 2 and 1, 2, 3, 4, 5 for the third, the fourth, and the fifth wave. So we're at the top here now. Now, there's the only other little wave that I haven't got here, which I can't see very well, is this one here. So I don't know if this is just the A, the B, and the C to this point right here, or we come over to this point here. I'm not sure. So there could be a little extra wave in here to take us up one more wave higher here. But the main point is that we're looking at, and it does appear to be that way. I can see that we'll have a look at this in the 5-minute chart, but we would expect a corrective pattern to occur here at the 2150. Now, the pattern that we'd be looking for would be from wave 3 here to wave 4 here, okay? Now, the 38.2 retracement is down at 2130. However, the wave 4 of 1 lesser degree, which is here, is at it is higher at the 2135 area. So this is the likely sort of area to come into the 2135. That said, because we are where we are in the bigger picture in these fractals of this expanding third wave here, we may not even come back to this level. We may only come back to the 2140 here, okay? But at the same time, I know that this stop is a long way away, and that's pretty sort of scary, but really a stop is there just in case the whole thing goes totally wrong. And yeah, but we don't want the stop getting in the way of, if you put a stop too close, you're going to get stopped out, really. That's it. And we don't want to get stopped out. We're very confident of where the wave structure is, and we've got a long way to go, and we don't want to be, annoyed by stops being triggered out as such. So everything is managed quite well so far. I was just thinking if I've actually made another mistake in here, but I don't think I have. It's 1, 2, 3, just a large fourth wave here, and then that 1, 2, 3, 4, 5 are here. So I think we're on the right track. There's a very high probability we should expect this wave 4 to come in play. Now, what we normally find in the midweek, well, certainly in Australia anyway, is our bullish weekly cycles. So we can kind of look to Wednesday and Thursday to be those really swing choppy days, and then we'll look at the Friday and the Monday to be the bullish days again. Okay, so it's always from Australia point of view, it's always the Wednesday and the Thursday that we have to get through, and that's partly why I'm leaving the stop out of the way here. But the Wednesday and Thursday should deliver this particular correction here that we're looking at, and then we'll have the Friday and the Monday to run right through again. Okay, so that's where we are with that. Let me just go into the 5-minute chart. I want to have a look at that. I can see that it's pushing higher. Just looking where I've made my mistake. Okay, that's all right. So from wave 3 or 5 here and ABC to here, either to here or to here, this is a slight sort of problem, but 1 and 2 to here, then 1, a nice sharp for wave 2 here, wave 3 nice and strong. If wave 2 is simple, then wave 4 will be sideways and complex, and then wave 5 up here. So we've definitely got this structure through here, and then back to wave 4 here, pulling back to the wave 4 of 1 lesser degree. So on this tiny structure here, we are seeing wave 4 pull back to the wave 4 of 1 lesser degree. So this wave 4 here and pulling back to here when it's about right is important. So if I've made a mistake here, then it's in here, but so that means that this is definitely a corrective pattern in here. That's in 3 waves, and we see that 1 and 2 here. So we've still got 1 and 2 here, and be the 3rd wave here, 4th wave here, and 5th wave here. So we've still got this to go in here before we be bounce off here, of course, and so on down here. Now, I'm not worried about that at the moment. So the trend will take care of itself. All we have to do is manage the risk. Okay, so we're looking at something like this. This wave 4 here, this wave 4 was really simple and sharp, wasn't it? So that's a bit of a DNA sort of print that we could, footprint that we could use here. But normally wave 4s are quite complicated, but because we're in the sort of where we are in the trend, this wave 4 here would be rather simple and as sharp as I've drawn it. But we also have to be mindful that it could get a bit more complicated. It could get more complicated in the sense that we'll put wave 4 over here, wave C here, wave A here, and wave B here. So it may get into some sort of bit more complicated, bigger pattern here before it takes off here. But either way, it shouldn't bother us. Okay, now with corrections, once they start to really it's never really good to make a decision about corrections until they've reached maturity over 50%, 2/3 of their correction. Then you can kind of start getting into the guessing game of their being completed or not. Wave 2 is not a problem. Wave 4s, they get sideways and complicated, and that's where the triangles and double zigzags happens, and all that sort of stuff. So it's best to wait for these things to mature as much as possible. And once they've matured, then they give you an idea of that we can add to positions as well. But always with wave 4s is that the market can come back and test them. So this wave 4 can, we'll just go back here. So this wave 4 can be retested from this one. This one's going to be retested. And one day this one here is going to be retested as well. I don't think it will come, the next blue wave 4, the next larger degree, the minute degree structure may not come back to this area here, but it could do. So any adding to positions here for the longer term would need to be viewed as well, but certainly we can look to build in on this side over here as well. All right, well, that's sort of where we are at the moment with all of this. I don't want to look at other markets. I would have rather just spend that, because we've got money on the table here. I'd rather just spend the time with this trend from the bigger picture to the smaller picture, and we just keep going over it and looking for errors and anything that may pop up and so on and so on. Just one more thing here is that this 22 here is our target here, our next target, and within that, when we get our correction across this little area here, then we'll be facing group 2 here, so 65, 72 and the 80 here. The 72 is really important. That's the pivot within all of this, because there will be some type of corrective pattern within here. Then it's really the number 2 here that becomes the balance line for the corrective pattern that we're going to be seeing in there, and it's always a good place to get a nice quick trade out of. The more that you can recognize that the 72 here becomes the tested support, it's always the same. It's breakouts are important, but retests are more important, and it's the retest that you need to trade from and not the breakout. But anyway, this will give us some grief on the way through, but at least it's going to do that, so you can be like water off a duck's back, so to speak, once it's playing through there. But this number here, this is the one that we really need to make decisions about, because it's possible for this market to have a correction here across this level, and we'll talk about that one later, but it's possible for it to come back to this wave 4 here. Okay, probably not, but at least back into group 2 here, I would imagine, and probably at worst to the 50 here, and then up from that point there. So it's not a biggie, but we're going to keep the stop well out of the way here. We want to just allow the market to do its thing at this number, and we can take money off the table when we get here. Not all of it, but some of it, even some percentage or something, and then use that to buy back in here. So we will take advantage of it, but we don't want it upsetting the main trend and the flow that we've got happening. It's just something to do on the way, okay? Okay, it's enough yakking. Okay, cheers. Thanks for tuning in. Cheers.